A lot of traders think the holy grail is finding a mispriced option, looking for arbitrage opportunities to buy low and sell high. But here's the problem in today's marketplace. Mispricing is rare, short-lived, and not scalable. If you want long-term edge in zero DT trading, you need to ask a better question. Is the price I'm trading actually accurate? Because if it is, then you're playing a solvable puzzle. If it's not, you're building a system on sand. This video will break down how to tell if a price is accurate, why that matters more than mispricing, and how to build a strategy on top of that with zero DT options. For those of you that are new here, my name is Mark Anderson, and I'm a construction worker turned zero DT hedge fund manager. I've sold over $50 million in zero DT option contracts across more than 1,000 consecutive trading days. And if there's one thing I've learned from doing that, it's this. Real edge isn't about prediction. It's about interpreting what the market already knows, and the price is your first clue to that. Let's break it down. When we say accurate price, we mean, does this number reflect the true supply and demand of the risk? It's not about guessing where the market is going. It's about understanding what the market is saying right now. So how do you know if the price is accurate? Here's what I look for. A high volume with lots of traders voting on what it is. A tight bid-ask spread, meaning no big gaps between buyers and sellers. Diverse participation of market participants. There's hedgers, there's speculators, there's institutions, and there's retail traders all active in that marketplace. Consistent behavior across strikes and expiration as well. SPX is the perfect case study. It has millions of contracts traded daily and participants with real capital and real consequences. When that many people are transacting, the price becomes a collective vote. That's the kind of environment where edge can be built. Here's why I don't like the arbitrage approach. Arbitrage isn't scalable. It's short-lived and mispricing disappears fast. That's not enough size or frequency to build any real foundation on it. It's too random, and the amount of time it takes to find that unicorn could have been better spent creating real, sustainable, and repeatable option strategies. What we want instead is to operate in a market where the quoted price itself is the edge. Because when the market is accurately pricing in, it's telling you something very powerful. I don't want this risk. You can have it, and we'll pay you for it. And that price, that's your edge. You don't need to outsmart the market. You just need to interpret it correctly. Now let's connect this to risk premium, the extra payment you get for taking on an unattractive risk. Here's the problem most traders run into. They chase high premium without knowing if those premiums are fair compensation for the actual risk that they're taking on. And the only way to know that is to trust the accuracy of the quoted price. Let me give you an example. If you're selling a put and taking in $2 of premium, is that good? That depends. Is the market accurately pricing in the real risk? If the price is distorted by liquidity, manipulation, or low participation, you have no way of knowing if that $2 is generous or a trap. You're basically writing insurance without reading the policy to know what your coverage actually includes. But in the market like SPX, where millions of contracts are traded every day, you can trust that the price reflects the fear and demand in the actual marketplace. So when you see a high premium, it's not noise. It's the market telling you we're willing to pay this much to avoid taking on this risk. That's the insight. That gives you the confidence not to just trade, but to size your trades properly and build strategies that actually scale. Here's something most people overlook. The more often a market trades, the more accurate the price becomes. Your house might go up and down in value a lot, but you don't notice it. Why? Because your neighbor isn't shouting the price at you every 10 seconds. But SPX, that thing's screaming at you all day long what the price is. And here's the kicker. When you're trading zero DT, you're participating in a market that recalibrates every single day. So rather than pricing one 30-day trade and hoping news doesn't derail it halfway through, you place a new trade each day or several times a day. each one in accurately priced options on today's volatility and today's risk premium and today's market sentiment. That gives you faster feedback, more data points, smarter adjustments, and most importantly, it compounds your edge and knowledge exponentially faster. If you lose 5 trades in a row, would you rather it take 6 months to get back to even or 6 days to get back to even? Lastly, let's dive into this, drawdown management. The more accurate your price is, the faster you know when you're off course. It's like flying with a working GPS versus a broken compass. When you know where you stand, you can hedge more effectively, you can trade smarter risk premiums with confidence. You don't need massive margins of safety, you just need smart confirmation. And this is what lets you plan. With accurate pricing, you're making intentional bets. In environments you've tested, with risk you've quantified, that's the real unlock. So if you're thinking the game is all about finding bad prices, flip that thinking. The goal isn't to catch mistakes. It's to interpret the informed prices everyone else is trying to avoid. You don't need the price to be broken. You just need it to be real. Because when thousands of traders are saying, this risk looks unappealing, I'll pay someone to take it off my hands, that's a message. And if you can read that message clearly, you've got an edge most traders never even see. If this video helped flip how you think about options, hit the subscribe button and check out my other videos on risk premium, sizing, and how I structure 0DT trades from the ground up. And drop a comment below. What clues do you look for to know if the price is accurate? Thanks for watching, and I'll see you on the next one.